Welcome to ValueVest Daily. Okay, today we are launching into orbit for a full, deep dive masterclass on what honestly might just be the single most disruptive shift in digital infrastructure since the actual birth of the cloud itself. We're talking about the data center's exodus to space. Yes, you heard me right. Orbital AI data centers. Now, I know, it sounds completely like science fiction, but listen, massive GPU clusters powered by literal endless sunlight, cooled by the absolute vacuum of space. This is moving from a wild concept to hard reality way, way faster than most investors realize. Now, before we track the massive capital flowing into the sector, a quick but very important reminder. This explainer is strictly for educational purposes and is not financial or tax advice. Always do your own research. Markets are incredibly volatile, and as you can imagine, space tech carries some heavy execution risks. All right, let's dive into the whole shebang. So we are objectively analyzing a highly speculative, yet potentially astronomical high-reward investment thesis today. And look, this isn't just about putting a bunch of metal up in the sky. This is about untethering our absolutely insatiable demand for artificial intelligence compute power from the very real constraints we have down here on Earth. For this deep dive, we're pulling directly from recent, deeply researched market reports that have literally mapped out exactly which companies are building this specific infrastructure as we speak. Here is our agenda for today. We'll cover Earth's AI power crisis, the orbital compute solution, the infrastructure pipeline, analyzing the market opportunity, a stock deep dive with the DCF model, and finally, the investment risks and realities. Let's get right to it. Section 1. Earth's AI power crisis. Okay, 50 to 100 plus kilowatts. Why is this number absolutely crucial? Because this is the power demand for just a single rack of modern AI training clusters today. Just let that sink in for a second. Traditional servers that we've used for years, they typically draw just a fraction of this. But today's generative AI, with thousands of GPUs all networked together, is literally demanding 10 to 20 times the power of legacy systems per rack. And this directly limits the future capabilities of the AI tools you're using and investing in right now. A single hyperscale data center campus can now easily suck down hundreds of megawatts. We are hitting a hard, physical brick wall in our terrestrial infrastructure. We simply cannot build enough power plants and transmission lines fast enough to feed this AI beast. The contrast here is just stark. Down here on Earth, the US grid alone is facing a projected 3 to 5 times surge in data center power demand by the year 2030. To put that into perspective, if you try to build a brand new data center today, the grid interconnection queues are stretching 5 to 7 years out. That means even if you have the billions of dollars to go buy the GPUs right now, you literally cannot plug them in until the 2030s. No way. Plus, you've got massive water shortages from cooling towers to worry about, not to mention endless local zoning battles. But you look up to space, specifically in sun-synchronous orbits, and what do you find? No grid limits, 0 local zoning boards, and quite literally an abundance of untouched 24/7 energy. Section 2. The orbital compute solution. So this shift isn't just about escaping pesky Earth regulations. It's about leveraging pure, unfiltered physics. For starters, those sun-synchronous orbits I mentioned, they offer unlimited 24/7 solar power. Out there is no night. There is no weather. And because there's no atmosphere to scatter the light, space solar panels are roughly 4 to 8 times more efficient per square meter than your standard ground-based panels. We're talking about delivering gigawatts of power directly to the compute modules. And beyond the power aspect, the literal vacuum of space provides natural radiative cooling. Add in free space optical lasers for terabit speed communication, and you're essentially turning individual satellites into one massive, globally distributed supercomputer. And all of this is designed to run on specialized radiation-hardened silicon that can survive cosmic rays. Let's actually double-click on that cooling aspect for a moment, because as any tech enthusiast knows, heat is the ultimate enemy of AI chips. Radiative cooling is a process in the vacuum of space where heat from the servers dissipates directly via infrared radiation. This completely 100% bypasses the need for those massive air conditioning units or the millions of gallons of water we use on Earth. It is 40% or more efficient than Earth's thermal management systems. And guys, this is not just some theoretical whiteboard idea. Companies like NVIDIA and StarCloud have already demonstrated H100 class GPUs operating in orbit right now using these proprietary thermal systems. They literally just beam the heat directly out into the infinite heat sink of space. It's brilliant. Section 3. The orbital infrastructure pipeline. We know the science works, so let's look at the timeline. This sector is moving from concept to deployed hardware at breakneck speed. Look at 2025. Star Cloud is already training the very first large language model in space, while a company called PowerBank launches its Genesis 1 satellite running AI models. Pushing into 2026, Axiom Space steps up by launching dedicated orbital data center nodes, partnering with Kepler for those fast optical links. The momentum really accelerates by 2027 because that's when the big hyperscalers enter the chat directly. Google is targeting the launch of its Project Suncatcher modular TPU prototypes. And looking toward 2028, SpaceX has filings for up to 1 million satellites operating as solar-powered data centers, potentially delivering over 100 gigawatts of capacity. The pipeline is packed.
Section 4. Analyzing the market opportunity.
Okay, so if the physics work and the hardware is literally launching into orbit, what does the total addressable market look like? Well, the financial projections from the source report are absolutely staggering. The in-orbit data center market specifically is projected to grow from about $1.8 billion in 2029 to a massive $39.1 billion by 2035. That represents an astonishing 67% compound annual growth rate. Right now, to put that in perspective, hyperscalers on Earth are spending north of $660 billion on AI capital expenditures. The core thesis of the report we're analyzing is that a significant, inevitable portion of that massive capex is going to flow directly into orbit as launch costs drop. And zooming out even further, the broader cumulative space infrastructure and satellite services market is expected to hit over $700 billion over the next decade. The key catalyst making this entire $700 billion ecosystem financially viable? Heavy lift rockets. Once rockets like SpaceX's Starship and Rocket Lab's Neutron come fully online, they are projected to drive the cost of getting things to lower Earth orbit down dramatically. That is the real game changer here. Section 5, Stock Deep Dive and DCF. So let's introduce the specific companies analyzed in the Source Materials Investment Framework. The report categorizes the key players by their crucial roles. You've got Rocket Lab, ticker RKLB, providing the vertical integration. The source rates them a moderate buy for their heavy lift rockets and next-gen silicon solar arrays. Supporting them is Redwire, ticker RDW. They are quietly building the picks and shovels of this space gold rush, meaning the actual power and thermal management systems needed to survive up there. On the higher risk side, PowerBank, ticker SUON, is categorized as a speculative buy. They're a pure-play microcap building an actual orbital cloud with adaptive thermal tech. And of course, underlying the whole operation, NVIDIA and Alphabet remain core holdings, representing the necessary compute layer and silicon for literally any AI infrastructure basket. Now, let's unpack the specific discounted cash flow, or DCF model, provided in the source report for Rocket Lab, so we can determine if it's a buy based on the math. The model runs on what the source calls conservative assumptions for a hypergrowth sector. We're looking at a 40 to 50% revenue compound annual growth rate driven by both regular launches and specialized space data center payloads through 2030. It factors in an 11% weighted average cost of capital and assumes significant margin expansion once their larger Neutron rocket is fully operational. When you add a 4% terminal growth rate to the end of that, the source model projects a fair value of $75 to over $90 per share today. Because the current trading price is significantly below that target, the report's DCF framework categorizes it as a clear buy. They note there is asymmetric upside for risk-tolerant investors if these orbital data center payloads materialize exactly as projected.
Section 6. Investment risks and realities.
All right, now we must pivot to the critical counterbalance. We've seen the massive, sky-high upside, but we have to neutrally and seriously look at why this is an extreme, high-beta, multi-year horizon investment. First off, physics is hard. Catastrophic launch failures can and do destroy capital instantly. Even if the rocket survives the trip, there could be totally unforeseen delays in radiation hardening these delicate, cutting-edge AI chips. Add to that the looming threat of stringent orbital debris regulations that could seriously throttle the size of these multi-gigawatt constellations. Then there are the massive upfront capital expenditures required before a single dollar of revenue is ever generated. And finally, heavy competition. Primarily the absolute giant that is SpaceX, which could just decide to dominate the market with its own private capabilities. Basically, the math here only pencils out if the cost per kilogram to launch drops below very specific, highly aggressive thresholds.
So I leave you with this final thought to ponder today. Is this staggering $700 billion orbital compute market, with its promise of limitless solar power and zero-cost cooling, truly worth the extreme regulatory and explosive launch risks? Or do you think terrestrial infrastructure operators will somehow find a miraculous way to adapt to their power constraints right here on Earth? It is a fascinating race to watch unfold. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. Thanks so much for learning with us today, and we'll see you in the next one.